the S&P 500 daily cloud chart. Forget about the bottom of the cloud, 26 bars back, and trying to find correlations of support and resistance areas. There's bigger fish to fry. This hasn't happened since the great financial crisis, where a sequential cluster buy countdown has started, and it's already to 9. And here's a snip of the 2008-2009 great financial crisis, and you can see the sequential cluster countdown 13 printed here. And here's the 9 on September 2008, and the 13 printed here, and then it started another one and printed another sequential cluster countdown 13 here in January of 2009, right in the middle of the month. And price in the pre-market hours for the S&P 500 at 6:17 a.m. Central Time on the 20th is 42.72. And in one or two more bars, the zigzag swing point will happen here on October 17th bar at the high, the D wave, down wave 4, so one or two more bars of lower highs and lower lows, and that will have the swing point here. And the QQE took a dive down. It looks like it's eventually going to go under the slow QQE again, and it's under 50 at approximately 45.66. Slow QQE 42.97, just a couple of points away. And the conversion line has ticked up to 4331.63. It's a 9 moving average for the cloud, so it took the average back to about this bar and ticked higher. So price is below the baseline, the conversion line, the bottom of the cloud current price, and the bottom of the cloud 26 bars back. And there's a new ongoing supply line, which for today on the 20th is at 4388.65. So close above that, and that gets qualified. Same thing with these other ones here. And this ongoing demand line is at 4232.70 for the 20th. And price would have to open below it and then close below it to get qualified. And it could also gap down below this low and above the demand line, 4232.70, and then close below it, and that will qualify it as long as it doesn't tick back up to fill the gap wherever it gapped down. And then again, the other way would be to tick higher, approximately higher than this high, 43.64, around that area, and turn around and come back down and close below the demand line, and that will be qualified too. 3 ways. And there's no qualified demand projection from this qualified demand line, as price on the 19th opened higher than the close and low of the bar on the 18th, and then ticked a little higher and then subsequently closed below it. So no demand projection for this qualified demand line, and nor is it qualified and confirmed. It just stays qualified. And I am unsure if by having qualified status only, if it can turn around and tick higher and close above 4367.03, that it becomes canceled. I am not sure about that. And zooming in, the Bollinger Band mid-band was broken to the downside, so it's in between the lower band and the mid-band, and the arc 3 down, the 0.618 level was nailed at 4271.52, and that had better hold. Similar to this one back here, this is the 0.382 arc down 1. You can see it was nailed and then headed to the upside. So we need to see that here. If that gets broken to the downside, then there'll be definitely more downside price action. And I'll be looking to the lower Bollinger Band here at 4197.18 and holding steady. And it's pretty close in the pre-market hours. It's still around 42.70. It's at 42.69. So give or take a couple of points, like back over here. Let's see that bounce to the upside. The lower Stark band definitely has a downwards trajectory, and the upper Stark band is starting to get its downwards trajectory. I don't like to see that at all. And here's the 200 EMA in dashed green, and yesterday it closed just about by it, 4272.17. Definitely nailed it on the low, 4270. And the channel 3 low was right above the lower Stark band at 4260.11. And then there's the 200 simple moving average, 4231.27. And the next level for the arc to the downside is the magnet level at 3936.85.